Secretary Bessent had this huge tweet up earlier this morning, and he's talking about the CapEx comeback. Now, that's capital expenditures, investments of businesses into capital here in the United States. Talk to me, why is the business community responding so positively to Secretary Bessent and President Trump's economic policies, especially when I was told by the mainstream media, that the entire economy was going to crash and burn by this summer? It actually seems to be doing really well.
That's exactly right. And the financial markets, Jack, show that with equities recently reaching all-time highs. The CapEx comeback is a function of the One Big Beautiful Bill, which was designed to get the CapEx moving as soon as President Trump took office, because it was set up to be retroactive to Inauguration Day. So when the president was elected last year at the historic election with which he won, sentiment improved, the markets got excited. Fast forward to the new year, we're going to get this bill that's going to make the tax cuts permanent. It's going to have even more pro-growth supply side initiatives in it. And by the way, it's going to be retroactive to the first day the president takes office. That's going to encourage businesses to spend, to invest in their product, whether it's a good, a service, whatever it may be. And what we've seen, as that chart you had just shown up there shows, is essentially, excluding the pandemic, the fastest two-quarter gain going all the way back to late 1997. It's really stunning and is a direct function of President Trump's policies.
So when we're talking about this, that means, so if businesses are making capital expenditures, so that's CapEx, capital expenditures, if businesses are doing that, that's not something that businesses do if they think they're going into a decline, or if they think that the economy is going into a downturn, because this is that if you're doing that, they'd be looking at offshore, they'd be looking at ways to protect their protect their assets, et cetera. They wouldn't actually be looking to expand and grow. But that's really what President Trump's One Big Beautiful Bill and all of these other economic policies are actually pushing towards, this idea that the American people are suddenly going to have more of their own wealth, and that's actually going to be what spurs this economic growth.
That's exactly right, Jack. And the fact that, you've had this boom in anticipation of the bill becoming law, which it now has, just only strengthens and solidifies this improvement and will carry it forward. So the CapEx continues. And that capital expenditure, the spending, the investment, are all interchangeable words, yes, is a sign that the future is bright. It's a sign that there's confidence in President Trump's policies. What then happens after that is you get faster productivity growth, you get stronger wages, which means bigger take-home pay for workers. The good news is, because President Trump has policies enable to get inflation lower, we've seen a very large increase in what we call blue-collar wages. Blue-collar wages are under a boom. They're only time that we've had a faster or larger 6-month gain to start a new administration was the first 6 months of President Trump's first administration, and it was only a tenth stronger, so they're basically the same. But with this bill now being implemented, the forward on households and living standards, it's all positive. So it's great news, and I appreciate you being able to have us highlight it, because people should talk more about it. It's really good news, and it should be bipartisan.
Well, it actually is, because one of the side effects of this as well is that when you see those capital expenditures, so this is something, and I'll try of course to translate it right for normie speak for the audience. It's look, everyone sits there at their business, at their work. Gosh, I complain about it all the time. Rob Sig, you got to spend more on the lights around here. You got to spend more on this. You got to do more capital expenditures. That's what we need, Rob, over here at Real America's Voice. But the point is that, no business owner is going to be doing that unless, by the way, Rob spends a ton of money on the lights, to be fair, that no business owner is going to be doing that if they're not confident, if they're not seeing the returns that they want on their business. And in, I would say, in connection with that, the relationship with that, of course, is that your workforce is then going to be more motivated, number one, because they see these expenditures reinvesting in the business, but also if they see prices coming down, they say it's easier to afford things, they're going to be more motivated in general as well.
Right. So this is the thing. So to continue with your example, you have a business. Let's buy new software. Let's buy new computers, because that's going to increase our cash flow. and ultimately produce more of the things that people want. But the point is, with this one big beautiful bill, you can now expense 100% of that. So if you spend $10,000 on upgrading your technological infrastructure, you could deduct that off of your income. So it's a real incentive. And the one big beautiful bill, there's a lot of great parts to it, but the other thing that's really innovative and new is now you also, if you're a company, you want to build a data center, you now can expense that data center 100% on that plant, on that factory. You never had that before. So what it encourages American business to do is to invest in themselves. And then the people working there are going to do better. They're going to make more money. Their paychecks are bigger. That income they'll spend with them will create more jobs. So it becomes very additive, becomes very multiplicative. We saw it during Trump 1.0. And now we're taking all those positives, and with the president's vision and the implementation by Secretary Besson, we're able to now put this forward so that the next handful, hopefully decades, are really a golden era, as the president has highlighted.
Well, and this is totally different, by the way, from what we saw from the previous administration. I saw Secretary Besson's fantastic interview regarding Janet Yellen recently, but that was really an administration where all of this was driven from the top down in terms of inflation and inflating the money supply and increasing the money supply. Okay, you've got access to more capital, but that doesn't actually drive the behavior, does it?
No, that's right. I mean, and I mentioned, so we've got the one big beautiful bill, which is encouraging companies to invest. You've got the Genius Act. The president has talked about making the U.S. the crypto capital of the world, or the U.S. the crypto country of the world. You need to build data centers, and to operate those data centers, what do you need? You need energy. Energy is integral, as Secretary Besson has highlighted, and you need cheap and abundant energy. So that was also part of the one big beautiful bill. Trying to improve the permitting process, making it easier for companies to conduct business. And that is literally the genius and the foresight that this administration has in trying to actually allow business to produce the goods and services that people want at affordable prices. And that clearly was not the case in the prior 4 years.
Right. So when you're in a situation like that, and we used to talk about the Catian effect many times here on the program, were to say that, okay, this is great. The price of money has gone down for people who have the direct access to those funds, but that has an inflationary effect, because what you're doing is that increased spending at the top is driving up prices at the bottom.
Yeah. Well, this thing is with the one big beautiful bill, which will drive the blue collar boom. Now we're looking at middle and lower income workers. So that's really, as Secretary Besson's highlighted, Wall Street's done great. We obviously would like Wall Street to do well, but it's really Main Street's term. These are people who live paycheck to paycheck, who until President Trump's first term had seen no real wage growth, really, as I mentioned, in a decade and a half or so. So they need to benefit from it. And, on inflation, we could have strong non-inflationary growth, as we had under President Trump's first term. Growth was nearly 3%. It was actually over 3% the year before COVID, and yet inflation was de minimis. When you have inflation, it's typically because the government spends way too much, and this administration inherited the worst, basically, fiscal backdrop we've ever had. And of course, the Fed monetizes or prints money to pay for the government's profligate spending. And that's exactly what we had over the previous 4 years.